Thank you for investors, shareholders, advisors for coming along tonight, and stakeholders for that matter. I'm pretty privileged, and thanks for the introduction, Tim, to join the Liontown team. What Tim didn't mention was it was a big decision for me to move from BHP to join Liontown, but I did that with my eyes wide open. There were three questions I asked myself. Is the market there and real? Is the asset there and real? And can I work with the team? And the answer is obvious. I'm here. And the answer to those three questions was an overwhelming yes. And I'm hoping tonight when I go through the presentation, you will see why I've got so much faith in this project. And there's, the board's here today, and we've spent 3 days going through and looking at the assets. It's nothing like walking the ground. And I must say that you come away from this 3 days having a better understanding as to the opportunity, but on the sort of scary side, the work ahead of us to turn this into a commercial reality. And we're lucky tonight to have a representative from our traditional owners, the Jawoul, Greg. If you can just put up your hand, Greg. I don't want to single you out. Thanks for coming. We, as a board, had our initial induction into the Jawoul way of life and culture, which was very, very insightful for me, and just demonstrates our commitment to that relationship. So just quickly going through the standard disclaimer. I want to, 3.5 weeks ago is when I walked through the front door, I asked myself, what is the Liontown opportunity? And we want to set a bold ambition. And that ambition is grounded in a couple of key dimensions. And the first one being, we need to have strong ESG credentials. Why? Because our shareholders demand it, our investors and stakeholders demand it, and frankly, it's the right thing to do. But we need to have that in the context of strong shareholder returns. And we do that by three underlying dimensions. And it starts with the resource. We talk about tier one, we talk about world class, that's bandied around. But I want to demonstrate today why I think, and the reason I joined, as to why Kathleen Valley is a tier one deposit. Then the other dimension is the market. And again, we've done a lot of work on this. We've been supported by our advisors on this regard. And when I mentioned that, is the market real? We've got overwhelming support. And yesterday, the chair of Tesla said that there's an opportunity that the Australian government should be facilitating around furthering the EV market and industry in this country. And the last thing is, we value our partnerships with our customers, with our stakeholders. We understand that our values need to meet their values so that we all get a benefit. It's key to that relationship. And lastly, it's about profitable growth and long-term sustainable value. Ultimately, we want to see that manifest in our share price. I'll quickly go through this. About the Kathleen Valley opportunity, you can see there. But there's 2 points I want to make on this slide. Firstly, as a leadership team, we have skin in the game. 22% of the stock is owned by the leadership team. Most of it, almost entirely, was bought on market. And the second thing is, we've got cash in the bank. That cash will see us until we have to do the financial investment decision. There are a number of things that the board is contemplating at the moment, but we are fully funded. And David will talk about more an exciting opportunity and straight after myself. The team. Tim needs no introduction. A few of the others I'll help with that. You've got Craig Williams, who was the former CEO of Equinox, an $8 billion pure play copper company, a very seasoned mining executive. Steve Chadwick, again, a long-term mining executive, and we've got Steve fundamentally involved in the design of our flow sheet, bringing his wealth of experience to bear, helping the leadership team with the right choices. We have Anthony Cipriano, again, a senior partner at Deloitte and a professional in regards to providing us the governance and the independence we need on the board. We've got David, who I'm standing on the shoulders of David and Jamie Day in the discovery of not only Kathleen Valley, but also Baldania, which is another exciting opportunity. So I've got to them to thank, and I better not stuff it up. And then on the executive side, you've got Adam Smits, who's a global project developer in a multitude of commodities, who's on board, and Craig, who's our CFO, who's also got a wealth of experience in the lithium space. The ESG opportunity. And there are 4 things. I've spoken already about our customers. We need to align their requirements with our requirements and find the perfect harmony. Our communities. I've spoken about the importance of our traditional owners, but more broadly, all our stakeholders. Social value is not the enemy of stakeholder value or shareholder value. Social value. The environment. We've got the benefit of starting a greenfields operation with all the appropriate technology that will lower our carbon emissions. It is a golden opportunity for us. And we're doing that. We're incorporating a lot of that into our design. Namely, we've got best-in-class emissions, and a lot of that's due to the fact that we want to go underground. Secondly, we're going to try and source as much renewable energy into our project that we can get. We'll either produce that ourselves or buy it from third parties. We're making the underground technology ready for when electrification occurs, we will adopt it. And finally, water is equally as strategic as the lithium itself in this part of the world. So we've got to respect it and recycle it. And I've spoken about the social and corporate governance. I'll quickly go through this because everyone's aware of the lithium story, and it continues to further underpin. In fact, it's getting stronger, and it's making us wanting to accelerate our project. An acceleration is due to this graph. When we published the PFS, we felt that at the time the general consensus was that the market would come into deficit about 2026. We're now seeing, based on our latest view of the world, what I call our P50. It's more like 2024. So we're pivoting, and we're going to try and capture that opportunity for when the market's going into deficit. This slide basically summarises why I joined. When we talk about Tier 1, there are a couple of dimensions. Size, 156 million tonnes of resource and over 70 million tonnes of economic reserves. Quality. You can see on the graph on the right, you've got Greenbushes, undoubtedly the best deposit, hard rock in the world. Then you've got Mount Holland, which Wesfarmers and SQM have already committed. Then there's Kathleen Valley. So we've got a lithium equivalent at 1.5, but just lithium oxide alone, 1.4% grade. And the final dimension for Tier 1 category, as far as I'm concerned, is its cost position. It has to be resilient and robust through the cycle. And when you look at this, if you look at the numbers at the bottom of that graph, our all-in cost for the first 5 years is $353 a tonne, dry metric tonne, landed in China. And if you look at the average price for the last 5 years, even at its lowest point for 1 quarter of 380, we've got headroom. That's what gives this project resilience. And part of the final study, the bankable study, we're going to look at further optimisation of this. Again, this graph shows why we're such a unique opportunity. We're not in Central Africa. We're not in Western Africa. We're not in northern Quebec. We're in a world-class mining jurisdiction. And that carries a premium. And I'll leave it to you to work out how much an investment opportunity we are when you compare ourselves with our peers. So I'll just explain this graph just quickly. If you start at the bottom, there are 55 deposits worldwide, hard rock. If you look at how many of those are greater than 40 million tonnes, it brings it down to 12. Then you look at how many are in the developed world, brings it down to 8. And then the only 3 that are in pre-development are ourselves, Mount Holland and James Bay. And if Mount Holland's already committed, you've got James Bay, which is subject to the merger. We're not sure where that sits in the whole development priority for the new merged company. It leaves Kathleen Valley as the only opportunity that's got 100% offtake optionality. Talked about the jurisdiction. I want to say here, where we're situated, there are 7 other underground mines. I've worked in 2. Right? So it's a well-established, well-understood mining jurisdiction. Okay? And when people tell you, well, can they mine the pegmatites, the spodumene? Well, these mines have been mining that pegmatite for decades. It's just been low grade and they've thrown it out as waste. It's been blasted, it's been mined, it's understood. I won't go too much about this, but just to draw your attention to, when we go underground, you can see there are some significant high-grade pockets, which we're going to capture early. And thanks to Snowden, our mine schedule allows us to improve our first 10 years' worth of grade and tonnes. So thanks, Alan, for that. I mentioned that the supply and demand dynamic, the supply deficit, has led us to accelerate the project. So we're now looking at getting it into production in 3 years. But to do that, there's 3 things we need to cover off. Firstly, we've got to secure our offtake arrangements with our customers. We've got to accelerate the project financing side of it. We've got to get all our approvals. That's a given. And then finally, there are some long lead items, SAG mills and some other bits of equipment, trucks, that we need to put an order in or a production slot in order to secure them. Finally, I want to quickly talk about the downstream opportunity. We did a scoping study back in October just to test how robust the financials are, and it shows significant promise. But I think this slide next is the one that tells it for me. When you look at the integrated raw material converters, the people like Albemarle, SQM, Ganfeng, all those current players, and look at their margin over the last 5 years, they've consistently averaged between 20 to 26%, 21 to 26%. What did the spodumene producers do over that same period? It wasn't that healthy. So that told me immediately that there's rent being captured by the integrated raw material players that we want to be part of. Finally, this last slide. Here's our product on the right. It's clean. It's the right size the customers want. And there are 3 objectives that I've got to deliver with the team. We've got to finish the DFS. We've got to secure the offtake arrangements and we've got to secure the financing. We need to conclude our native title agreement with our traditional owner partners. We've got to strengthen our local community engagement. That's critical as well. Finally, I've got to build a team that's aligned to the vision. And it's pretty tight in the market today. So this is becoming a priority for us.